How's it going, YouTube? Today we're going to talk about covered call option strategy. What's this and why you should be doing this, and we're going to cover up these things. So let's go ahead and start it now. So I have this article here on bankrate.com, and we're going to read it a little bit, and then I'll show you, explain you what it is, and give you my opinions on this. So let's go. So basically, a covered call is a basic option strategy that involves selling a call option or going short for every 100 shares of underlying stock that you own. So you can only, first things first, you can only do covered call when you have more than 100 shares, and you can only do every 100 shares. So you can't do it with 150. You have to do it with 200 or 300 or 400 or 1,000 or every 100 shares. So it works like this. It's a relatively simple options trade to set up, and it generates some income from a stock position. So a covered call is a kind of hedge strategy in which a trader sells some of the stocks upside for a period of time in exchange for the option premium, which is the generated income that you get from the strategy. So normally selling a call option is a risky thing to do because it exposes the seller to unlimited losses if the stock soars or goes down. However, by owning the underlying stock, you limit those potential losses and can generate income. So first things first, guys. Covered call is a strategy for you to enhance your income from a stock market. So if you bought a stock or you have any shares on a stock and you're earning dividends, for example, you can do covered call to enhance your monthly income. So let's say you make 1% a month, for example, on any stock. If you're doing cover call in this specific stock, you can go up to 3-4% a month. Sometimes you can do cover call weekly on the US. So in some countries you can only do it monthly, but in the US you can do it weekly, which is pretty good. And it all goes down to knowing what stock you're doing the covered call, because you cannot be doing this with every single stock, right? You should be focusing on the so-called blue chips or the biggest stocks in the market for you to be more protected. But it's pretty much like this. So here he explains a little bit of what it is and like what are all of the minor details. What is a contract, what is share, how does it work, and it's kind of hard to explain right now, so I'm not going to be explaining it. But basically, a covered call is a strategy for you to generate income. And here are some of the pros and cons of covered sales. By the way, I'm sorry if I'm stuttering. It's just that it's not my native language, but I'm trying my hardest to make it clear for you guys. Okay, so yeah. A covered call can be an attractive option strategy for a variety of reasons, but like all option strategies, has its downsides too. Yes, just like every strategy in the market, there's nothing that's perfect, but if the pros outweighs the cons, then you should be doing it. In my personal opinion, I think it's a good strategy for you. Of course, you have to be the owner of your own responsibility. We all know that stock market is not a fixed income, and you can't lose all of your money. So just for the disclosure, because I don't want nobody like putting the responsibility on me if they ever lose money or something like this. But I want you to understand that there are more pros than cons with covered calls, and even the billionaires does it. The billionaires does or do it. I'm not sure. You have correct me which one's better, which one's the correct. But yeah, so advantages of a covered call. So it generates income from a position. Just what I said. Just like I said, a covered call can generate income from a stock position that may or may not pay a dividend, increasing its overall profitability. So if you do covered call on a stock that pays you dividend, you earn both. So you actually have two streams of income, which is the income from dividends and then the income from the covered call. And essentially, you still have the stock with you in your stock portfolio. So it's a really good strategy. Relatively low risk. Covered call is a relatively low risk way to trade options since you protect the short call with your stock option, which is right. It's easy to set up. I mean, some of these strategies, they take up to 4 minutes, 2 minutes. You can literally sell a call option in like a minute or 30 seconds. So it's super fast. It's quick. You turn on your laptop, go to your broker, and then just pretty much do the strategy. It's super fast, super easy, very practical. So it hedges your risk. A covered call hedges your risk in a position by providing some compensation. So there's a compensation as well, and it can be reestablished over and over. If the call expires worthless, and you retain your shares, you can set up the covered call again and again every week or every month. Okay, even if your shares are called from you, you can repurchase the stock and set up a covered call again. So the reason why you would do, I would say, I do covered call, and I think most people they do covered call is because they want like a monthly or weekly wage from the market. So dividends is good, but it's even better if you can have dividends plus something else with it. And yeah, you trade that by having more profit with the market positions. But basically, a lot of people they trade that, they exchange that for some consistency in a wage. So it's like you have a salary. It's like every month you're earning a salary, just like you earn a salary when you're working. So a lot of people they do this, and I really like this idea because it provides you consistency, and it gives you that consistency and that security that you're gonna have a wage on the next month. Of course, it's not fixed income because we're talking about variable market, but you still earn it every month and every now and then. So it's really good. I think it's an additional salary, and everybody should be looking for this. Of course, do your research and study, but it's really good. Now we're gonna talk about some disadvantages of a covered call. So it's a small, limited upside in exchange for downside. With a covered call, you can earn a relatively small amount of income, but must bear any downside from the stock, leading to potentially lopsided risk return setup. Yes, this is a disadvantage. So you have to see which one's better is best for you. But that does not mean it's a bad thing. Okay, this thing right here just shows you what can go wrong, but it's up to you to see how you're gonna look at this. Because again, it all comes down to perspective. You have to see what's best for you and what's your risk appetite for you to really consider this thing a downside right here. Again, let's go again. Trading away all of the stock's upside. One of the reasons you likely own the stock is for its potential to rise over time. By setting up a covered call, you're trading this upside until the option's expiration. If the stock rises, you lose a gain that you could have earned. That is so right. And again, it's an exchange. So you're exchanging the rise of the stock for a potential, not a potential, but a guaranteed income. And it could be weekly or monthly, depends on how you're doing this. But again, there's nothing that's right or wrong. Oh, but I could be earning more. Yes, but you don't know if you're gonna earn more. You don't know how how much the stock will rise, or if it's not gonna rise, because again, we were talking about the stock market. It's very unpredictable, and you can really control it. So a lot of people they prefer having the consistency of earning a monthly wage rather than trying to earn from the rise of the stocks and so on and so on. But they're both right. They both work. So it's just another downside, or quote unquote downside. It just really depends on the way you look at it. So may lock up your stock until the option expiration. So yes, it's gonna literally lock up your stock. You can even sell. You can do anything because the money that you have is your guarantee. But then I am gonna explain this later to you. So by selling a call option, you may feel disinclined. Oh, I'm not sure that I've never even heard this word in my life in English before. But you got what I'm saying. To sell your stock until the option expires, though you could repurchase the call option and then sell the stock. Yes, so you can always repurchase your stock, okay? Even though you have to give it back to the person that bought the right to do your strategy. So you can always repurchase the call option again and again and again for the rest of your life, or for as long as you have the stock with you. Requires more capital to set up. This is true. That's a downside. With a covered call, you would need more money to buy stock, and that requires substantially more cash that you would earn, that you would need in a pure option strategy. So again, you need at least 100 shares. So you can only do covered call with 100 shares. So per 100 shares. So every 100 shares, you would require you to do it. So if you have 50 shares, you're not gonna be able to do covered call. If you have one share, you're not gonna be able to do it. So you need way more money, and essentially, I think it's a good idea for you to not just do covered call in one single stock, but doing many stocks because you're splitting the risk. Um, and it's a little better, but that's another strategy for another day. But yeah, you need substantially more money and more cash available than you would do if you're doing some other strategy. So yeah, and may create taxable income. Selling a successful covered call would generate taxable income and in a taxable account. In addition, if the underlying stock is called from you, it may create a further tax liability if you had a capital gain on the stock. So you need to pay tax. But again, what do you prefer? Do you prefer not making money and not paying tax, or making money and paying tax? I'd rather pay money. I'd rather make money and pay tax than not pay tax at all and not earn money. So you want to pay tax because that means you're earning money. That means you're making money, right? So again, this is not really a disadvantage. It's just the way you look at it, and this is why I like covered call so much, and I think everybody should put an eye into it because it's a good strategy for you potentially, and even for your retirement plan if you want this for your life. So I think it's important that I'm here to help you guys with this. And it's pretty much it. And then the website gives you a little bit of the best times of when you should use your covered calls, and this is very relative as well. But basically, again, a covered call is a strategy that you do on the stock market to generate more income. And I hope you could understand some of it. Again, I'm sorry for stuttering. It's just that it's hard for me because of the English. But yeah, I hope you guys understood it. So subscribe for more. We're gonna be talking about stock market in this channel, forex, and money management, and in general, finances and everything, just so you can improve as a human being and financially, and have successful and become successful financially speaking, so you can have more freedom, more time with your family, more happiness, and more opportunities overall. So I hope you liked the video. I'll see you later. Bye. I'll see you. My name's Samuel, by the way. See you guys. Bye.